So welcome back to Managerial Accounting. The purpose of this little mini, there'll be actually two little mini lectures reviewing the results or the solutions for the exam. Well, the first one will be on the multiple choice part here. And we'll just go through each of the questions. We'll go over the answer. And if you think you disagree with the answer, then write me a little essay and email it to me and explain to me why you disagree. All right. So first question, Airco company is tempted to consider support costs to be facility level costs that do not need to be applied to product costs. Which of the following explains what is misguided about this approach? Well, what's most misguided about that approach, you got to take the best answer here is C. Product costs may be inaccurate because support department costs may be used more heavily by some products than others. So we look at support department costs, their usage in various departments varies significantly. So we want to come up with an allocation method that recognizes that different support departments, different production departments use the support department costs unevenly. So the best answer there is C. Joint costs, remember the story of Elmer the pig up in New Hampshire. Joint costs are inseparable before the split-off point. So the answer there is A. 3, which of the following are the 4 common methods of allocating joint costs? Well, the 4 common methods, not in any particular order, are the market value at split-off, physical units, weighted average, and net realizable value. So the answer there is C. On your net realizable value of allocating joint costs, which of the following equation is used to compute the value of the products not processed beyond split-off? So if they're not processed beyond split-off, and you're allocating them based on their value at split-off, it would be selling price at split-off times quantity because they're not processed further. So the answer there is A. You can try to make a case for C, but C includes additional processing costs. So not expecting any additional processing costs if they're not processing beyond split-off. So the correct answer therefore is A. Number 5, which of the following is a drawback using a single plant-wide rate to apply overhead to product costs? Well, the one that is a drawback of using a single method is a single driver used for allocating overhead costs is unlikely to be the driver selected that is appropriate for every type of overhead. Okay, so each type of overhead may actually have a different cost driver. So the answer there is B. 6, which of the following explains why it's difficult to apply support department costs such as janitorial costs to product costs? Again, you want to select the best answer. So best answer there is C. Appropriate cost drivers are difficult but not impossible to determine. It's difficult to measure the costs. That's not really true. Costs cannot be quantified. That's not true. Support department costs are hard to define. That's not true. So the best answer there is C. Either on process of elimination or just on its face. Appropriate cost drivers may be difficult to determine. Number 7, Woodbridge Incorporated manufactures food-grade wax line takeout containers for the food service industry for many popular restaurants. Which of the following is most likely to be a support department cost within Woodbridge? So the one that of the ones listed there, if they maintain containers, so you got deli container, sandwich container, salad container. So those are all production departments. The one that it would be a support department would be the janitorial department, which would be B. Number 8, which of the following statements is true about the sequential method for allocating support costs to production departments? So take a look at A. Sequential method is also known as this step up. Actually, it's the step down method, so that's not true. Sequential method requires the use of a cost driver be used for each support department. That's really not true. Not the same. Sequential method is less accurate than the direct method. No, it's more accurate. So it looks like that B, by process of elimination, is probably the best. But let's take a look at it. Sequential method captures some, but not all of the support department costs by allocating support departments to support departments, other support departments and production departments in a series of steps. So you saw this in one of the questions on the take-home exam as well. So the correct answer there is B. Sequential method captures some, but not all, interdepartment support costs by allocating support department costs to other support departments and production departments in a series of steps. So the answer to 8 is clearly B. Number 9, Most decisions of management focus on a narrow range of production, which is called the relevant range. That's the range within which our estimate of fixed cost and variable cost is accurate. Number 10, and here, if you're confused on these ones here that have to do with the profit volume chart, just take a look at page 274. The point where the profit line intersects the horizontal axis on the profit volume chart, that's actually the break-even point. So the answer there is D. If you're confused on that, take a look at the chart on page 274. Number 11, Piper Technology has fixed cost of $1,500,000, unit selling price is $250, and the variable cost is $130. The amount of sales are rounded to the nearest total unit required to realize an operating profit of $200,000. So here's your formula. You have to take fixed cost plus the profit, divide by the contribution margin, so your answer is $14,167. Remember, when you have computations, do the computation first, then go look for one of the answers. So the answer there is, based on our computation, is A. 12, which of the following be classified as a fixed cost for a t-shirt manufacturer? None of these would be fixed costs. These are all variable costs: electricity, kilowatt hours, hourly wages, cotton, polyester, cloth. You remember, we're making t-shirts, so that's raw materials. So the only correct answer there are no fixed costs here. So which of the following would be a fixed cost? None of them. Those are all variable costs. So the correct answer is D. Okay, again, back to the cost volume profit chart on page 274. The total cost begins at the total fixed cost. So total fixed cost would be zero volume. And that would be, if you go to zero volume, you have your total cost or your fixed cost. So the total cost begins at fixed cost on the vertical axis. So the answer there is C. Take a look at the chart on page 274. Number 14, which of the following conditions would cause the break-even point to increase? If you want to increase the break-even point, increase your variable cost. Okay, all these other things would actually reduce the break-even point, but increasing the variable cost would actually increase the break-even point, because you'd have less contribution per unit, and you're dividing fixed cost by contribution per unit. If you increase the variable cost, you're reducing the contribution per unit. As production increases, the fixed cost per unit goes down. So you're spreading more fixed cost over more and more units. If you do that, you're decreasing the fixed cost per unit. Number 16, which of the following example of a cost that remains the same regardless of the number of units produced? Well, straight line depreciation on factory equipment would be the same regardless of how many volumes that you produce. If you use units of production, you wouldn't consider that a fixed cost, but straight line depreciation is clearly a fixed cost. So the answer there is C. 17, which of the following is a reason for easy identification and control of variable costs under the variable costing method? A is true, B is true, and C is true. So the correct answer there is D. All of these choices are correct. 18, contribution margin is computed as contribution margin divided by sales. That's a simple definition. Contribution margin is contribution margin divided by sales, or you could take the contribution per unit and multiply and divide by the sales price. So the answer there is B. 19, the amount of income under absorption costing will be equal to the amount of income under variable costing. Remember the little chart that I gave you, which will come in handy. They'll give you the same results if the number of units manufactured is equal to the number of units sold. So the answer there is B. That's the one scenario when you're going to get the same net income under absorption cost and under variable costing. 20, under variable costing, which of the following costs would be included in the finished goods inventory? So wages of machine operator, that's a variable cost. Steel costs for a tool manufacturer, that's a variable cost. Electricity used by factory machinery, those are all variable costs. So those will all be included in the finished goods inventory because they're all variable costs. So the answer there is D. You saw this when you did the variable income statement on the take-home exam. 21, the amount of income under absorption costing would be more than the income under variable costing when the number of units produced is larger than the number of units sold. So again, I gave you that little chart there. So the answer is A. You're going to get higher income under absorption costing when you produce more units than you sell. 22. On the variable costing income statement, the figure representing the difference between manufacturing margin and contribution margin is the variable selling administrative expenses. Remember, manufacturing margin is sales minus the variable costs, and then you subtract out the variable selling and administrative expenses, and you get the contribution margin. So a correct answer there is D. 23, which of the following would be an inappropriate activity based for a cost analysis in a service firm? Well, service firm could be mowing lawns, could be customers served, it could be haircuts given. Service firm doesn't have inventory, so B would be inappropriate for service firm. 24, which of the following is required by generally accepted accounting principles? So GAAP actually requires you to use absorption costing. So you can use variable costing for internal management purposes, but for costing and figuring out cost of goods sold on the income statement, you got to use absorption costing. That's what GAAP requires. Okay, HEDI is trying to decide how many units to produce during the month. The company policy is to have 20% of the next month's inventory at hand at the end of each month. Projected sales for August, September, and October, so they give us the amounts. The number of units to be produced in September is, so you got to hit the September sales, which are 20,000. Plus, you got to have an ending inventory of 20% of the next month's sales, which is 20% of 40,000. And those are the number of units you have to have available, but you got a beginning inventory to draw upon. The beginning inventory would be 20,000 of the current month's sales. Okay, so your correct answer there is 24,000. So we got that. 25. Sales revenue is 1 million. Sales commissions are 5% of sales. Sales managers' sales salary is 80,000. Advertising expenses are 65, and shipping expenses are 1% of sales, and miscellaneous expenses are 2,100 plus 1% of sales. The total selling expenses for the month. So you just look at these ones and say, which of these are sales? The total selling expenses, so it'd be 5% of 1 million would be the 50,000. Sales manager salary is 80,000. Advertising expenses are 65. Shipping expenses are 1% of sales. So we got the 10,000. $2,100. Selling expenses are $2,100, again, plus 1% of sales. So if you add those all up, you get 217,100. So the answer there is A. 27, a company is preparing a cash budget for a cash budget. The cash balance at January 1st is 290. It has a minimum cash requirement of 340. The following data are provided. Cash deficiency, after considering the cash, the amount of deficiency in excess of cash after considering for January is, so let's take a look at what January. So January, we started with 290,000. We've got collections of January of 1,061,000. We've got disbursements of 94,000. So that gives us 366,000. The required minimum amount of cash is 340. So we've actually got excess cash of 26,700. So the correct answer there is A. Which of the following is an integrated set of operating and financial budgets for a period of time? That is the master budget, which is A. 29, a disadvantage of static budgets. These are budgets that do not change as a result of activity level. So that's a disadvantage, and then they do not allow for possible changes in activity levels. We saw that when we introduced budgeting. So the answer there is C. 30, which of the following estimates the number of units to be manufactured to meet budgeted sales and desired inventory levels? That would be the production budget. Answer there is C. 31, which of the following would be ignored when preparing a cash budget? Depreciation expense is a non-cash expense, so you would ignore that. Remember the adjusting entry when you did a financial accounting 1, You debited depreciation expense, you credited accumulated depreciation. Depreciation, when you recur the expense, is not a non-cash expense. And 32, the primary budget, the primary budget for a non-manufacturing business would be the staffing budget, as we saw. We did the examples on people who clean the rooms at the hotel. Okay, so I hope you found that review useful. I'll do a separate one on the take-home part of the exam, but that's for the multiple choice part. And if you get confused on that cost, volume, profit chart, remember I said take a look at the example on the illustration on page 274. All right, so until next time, adios, au revoir, hasta luego, auf Wiedersehen. We'll see you again soon for the take-home part of the exam. Be well, everybody.